All right. Sorry, my allergies are all jacked up. Good morning, traders. Welcome to Price Plan Profit. I'm Melissa, and it is Saturday morning, August the 16th. That means I am prepping for swing trades next week. Now, let me start off by saying I am leaving for vacation on Friday. So what that means for me is typically if I'm on vacation, I don't like to have a lot of open swing trades on the book. I am fine with my long-term trades or my leaps or whatever when I'm not at my desk being on my books. But as far as the shorter dated monthly expiration swing trades, I don't like to go on vacation with a lot of those. Deepak, I can't figure out how to move the camera. So unfortunately, no, it's just going to be in the bottom right corner. All right. So with that being said, I'm going to get started here. I like to use koifin.com just to get an idea of where the strength is at in the market, how things have changed, if they have changed. Looking for, what is outperforming, doing better than the others. So I want to show you what I'm looking at. And then I've already done this. I know what sectors I'm focused on for my plans this week, but I want to show you. I look back at 3 months and you can see metals and mining, gold miners, semiconductors, and home construction followed by tech. That's what's leading us over the last 3 months. As far as the last month, home construction, gold miners, metals and mining, communications, and tech. All right. And then just looking back over last week, the JETS ETF is up there followed by home construction, healthcare. Healthcare's been at the bottom of the barrel much of the year. It did peek its head above. A lot has to do with the UNH and LLY doing so well. Communications and then some regional banks. So that'll give you an idea of what sectors are outperforming on those different time frames. After that, of course, I need to know what planned economic data is coming out. Good morning, Cece. Good to see you. For next week. So I'm going to pull up the Forex Factory calendar here. We got to go to next week because this week is over, right? And not a lot going on Monday. You got some housing market index, not expected to be a market mover. Then on Tuesday, CPI, that is in Canada. Sorry. uh, you see the CAD, that's Canada's CPI. We have building permits and housing starts at 8:30. Then you got Bowman speaking, weekly statistical bulletin. So not a lot Monday or Tuesday. Then on Wednesday, FOMC meeting minutes, that's the big one on Wednesday, just to see the meeting minutes from the August meeting right there. You have Waller speaking at 11. The meeting minutes are at 2, but before that, nothing really happening. Then on Thursday, unemployment claims, manufacturing index, PMI, lots going on Thursday. It looks like it's pretty quiet up until Thursday, of course, except for the Fed meeting minutes. Unemployment, the manufacturing index, PMI on Thursday, then existing home sales. That is an important one for me if I get into one of the home construction names that's on my watch list for this week. And then on Friday, Powell is speaking. Jackson Hole is happening as it does every August. And at 10 a.m. on Friday, Powell will be speaking. That's a big deal. As you know, it can cause some volatility in the market. So it looks like for the most part, it's not a super active week as far as planned economic data goes, but I just like to be aware of when that data is coming out and then look to trade the volatility. So, with all of that out of, let's take a look at the ES chart on a weekly chart first, just to see what has happened last week. That would be this little candle right here. Um, Not a lot of movement, right? We had a very small, tight range, as you can see. So, not a lot going on there. On the daily chart, Friday was a day that price pulled back. We made a new all time high before that. But we're just kind of inching up. There's been no real explosive moves to make new all time highs. It's been more of an inching up process. On the daily chart, the 9 EMA, that daily cloud that price pulled back to a couple of times last week. Um, that is at 64.38, let's just say 64.40. I would be looking for buyers to step in there. This zone remains my focus as it did has for the last several days, and that's going to be about 6400 to 63.69. The daily 21 is in there as well. To me, this would be a good pullback to look to buy the dip in for swing trades. And it doesn't just have to be the ES futures. It could be whatever your favorite names are that trade within the S&P 500. So looking at a 4-hour chart, again, we did make a new all-time high, but then we made an inside candle. And as you know, inside candles are my go to candlestick pattern. And when you have an inside candle followed by a breakdown candle, that is creating a sell zone. It's showing that sellers were in control in this area, or what we call a supply zone. So I'm going to color that red just so if price rallies up to that 6,500 level, I know that I have an inside and down candlestick formation there. Now, like I said, last week was very choppy. Tuesday was a great bullish day here. Price shot up. I remember it shot out of the PMZ and it never looked back. And since then, since Tuesday, we have just chopped in this range right here. And yesterday we closed at that range. The lower weekly edge for this week is at about 64.66. And then I'm going to move this down just to show you the bottom of that chop. So 66 to 53. I'm not making day trading blueprints right now, but this will be a level that I will watch as far as day trading Monday goes. Now, if we wake up Monday and price is below 53, then I would be looking for support at 64.40 and then back down here in this zone that I've been keying on the daily chart at 6400. All right, now I want to do the same thing for the NASDAQ. It's not going to look much different. The weekly chart on the NASDAQ, though, is giving us a pretty good sized topping wick. This is a doji candle. Price closed in the middle of this candle. It's a candle of indecision, which doesn't surprise any of us that were trading the market last week. The 9 EMA here is at 23,000, let's just call it. That would be a healthy pullback. Look for buyers to step in there. The week before, we did, or price actually caught up to this 9 EMA. So I would look for buyers stepping in if we get a pullback, and that would be almost 800 points, right? That would be a pretty large pullback. The market would feel like it's in turmoil, but just know that 23,000, you do have the 9 EMA support there. We are 1, 2, and 3 days down in the NASDAQ. That would be Wednesday, Thursday, and Friday. Each day closed below the close of the previous day. As Trendy John teaches us in the Trendy Room, the market works in cycles, typically 2 to 3 days up or down. Then you get a consolidation for a day or two, followed by either a continuation move or a reversal move. So in this case, 3 days down, we could look for Monday and Tuesday with very little planned data coming out. Could be those consolidation days. And then Wednesday, when the Fed minutes are read, as well as Thursday and Friday, when we have more economic data coming out, I believe that's when we're going to see a move either down, right? A continuation down to 23,635 to 503, or a reversal back up to the upper weekly edge here, the all-time high, and then it would be extension targets above there. So watch that for the beginning of the week to be more of consolidation. And then Wednesday, Thursday, and Friday, we get an idea of the next move. All right. As far as a 4-hour chart goes, you got a rounding top. That's opposite of a rounding bottom. I'm a bull by heart, and I love to buy the dips, and I love it when price rallies back up to supply. That is my preferred way to trade. And that's why I love rounding bottoms. Conversely, rounding tops aren't my favorite look because you will typically see further downside action after a rounding top. Where is the support? Where is the buy zone here on the 4-hour chart? At these green zones that you see on the screen, this is where I would be looking for buyers to step in. All right. So, like I said, I've already looked at CoiFin and figured out what sectors I want to focus on. Then I broke those down into 2 or 3 names in each sector, and it gave me this watch list for potential swing trades. Now, my focus is on metals and mining, gold miners, home construction, some communications, some tech, and then, of course, some semiconductors. Now, semiconductors are reporting earnings, especially your big ones such as NVIDIA and Broadcom are reporting earnings the end of August and the beginning of September. So, always be aware of that. Let me start with the names in metals and mining. I'm looking at Newmont Mining and AEM, Angelico. Those are the two on my focus list. Now, If I'm going to trade NEM, for instance, and I know that I'm going to be out of town and I'm going to be on vacation, I'm going to do one of two things. I'm going to focus on the smaller time frames and only plan to be in the swing for a couple of days. Or I'm going to focus on the higher time frames and plan to buy out to October or December expirations if price were to pull back to my zones. And then I would be fine because I would have plenty of time to expiration once I get back from my vacation. So on NEM, I'm going to show you the weekly chart. I'm looking for support. I'm looking for buyers to step in where we have the inside candle followed by a breakout candle. The 9 EMA is lining up there. So my zone to buy on NEM is 63.13 to 58.97. Then some targets to the upside are here at 69.23, 74.99, 80.95, and 86.37. So let's just pick this very top target. I would be buying here. I would be targeting here. That's $23, $24, right? So, how much time exactly would I need for price to move that far? Well, I would need about 3 months. So, that's why I'm saying I would have to go out until November, November or December expiration. All right. So if we just look at the option chain, I doubt there's even a November. No, there is. Okay. So we could look at, or I could look at November calls or December calls, and I could set an automatic order here. Let me show you what that would look like, how I would do that. So, number one, I want to see, does it have a tight bid and ask spread? If it does, then I can set up an auto order based on price and not worry about getting a really uh, not good fill. So, I would be buying here in this zone. I can choose the 60 or the 65 calls. So if I go out to November and I click on the 65 calls, I have the liquidity that I like to see. I come over here and I hit right there. Now let me see. Hold on 1 second because I need to know exactly where I would be looking to buy this dip. 63.13. So I'm going to just do 63.15 here. So again, hit that cogwheel there. Come over to, let me pull this up so that you can see it. 63.15, I would be buying at market. All right, whatever the price is when NEM gets less than or equal to 63.15. All right. I'm going to hit save. I'm just going to do a quantity of one. You can put however many quantity you want up here, but just for this example, I'm using one. I hit confirm and send. I hit send. Go back to my chart, and you can see that my market order is setting there that if any M comes down to my demand zone, I will buy a 65 call dated out to November. And that's how I can have orders in, even if I'm on vacation, this thing pulls back $6. I can still get in the trade, but remember, I wouldn't be actively managing it. So, in the event we get a big, huge dump, I would have to be okay with whatever amount I have at risk there. All right. So that's NEM, and I'm going to leave that automatic order on right there. Dividends, it's not a big dividend, it's a quarter. A lot of times when X dividends coming up, hold on one second. Sorry. When X dividend is coming up, you'll see a pullback basically equal to the dividend amount, but that's not a big amount, so I'm not going to worry about that. Uh, Beautiful rounding bottom right here at that trendy cloud. So I like that the pullback would bring me to that trendy cloud. That's just further confluence there. So I'm going to leave that name on or that bid on, and it will sit there until we get a pullback to the demand zone. Now, the other name that I would be interested in trading in metals and sorry, in gold miners is AEM. This is old, obviously, July 18th. Let's take that off. So on the weekly chart, AEM has demand at 127.19. That would be the buy the dip zone on the weekly chart. If I come down to the daily chart, number one, this would be a smaller time frame, just like for a week. But next week's lower weekly edge, you can see on Friday we pulled back to there and buyers did step in. Supply is up here at 135.87 to 137.81. So that would be my target on this daily chart. My very nice looking rounding bottom, nice continuation move out. This zone down here is a zone that I really like on this daily chart. 127.19 to 122.32. But since I have an order in for Newmont, I'm not going to mess with AEM because I don't like to have too much on at one time. If AM breaks below this pivot low here, or even this pivot low back here, I believe that the next earliest sign of support is here at 128, but I would target this zone down here, which is going to be very similar to your daily demand zone. So if you want to play AEM, here's some areas below that I would look at as support, and the buy zone for me is 126.5 by 122. All right. So that covers gold miners. Now let's look actually at metals and mining. I forgot I swapped those columns. And so yeah. MP, that was on my list last week and probably the week before. We didn't get the pullback, right? We didn't get the pullback that I was looking for. If I think about this from a longer term perspective, I have an inside and up candle formation. I have demand here. That demand zone is very wide, 63.63 to 45.66. I would have to give myself plenty of time if I was trading a demand zone to that is this wide on a name that moves. Well, it moves nicely, about $10 a month, but you can see that zone is 2 months wide, right? If we're considering the monthly ATR. So always know if I have a very wide zone, I'm buying extra time. Let's look at the daily chart on MP. Here is your lower weekly edge. This is a nice looking rounding bottom. We came here, made a wick low. We made a higher low here and then a higher low here. But notice price just couldn't bust out. We had an upper weekly edge in the way last week. Well, on Friday, price pulled back inside the body of the previous day's candle and created an inside candle. That means on Monday, it's going to be very important for me to watch. Give me 1 second. Sorry about that. Um, anyway, it's an important candle and watching on Monday, does price break above 76.58 or does price break below 74.64? Above it, that's a trigger long, and below it, that would be a trigger short, although I'm not going to short this name in the one of the absolute strongest areas of the market, but nonetheless, you're either looking to create an inside and up or an inside and down here. Or, of course, price could just chop between these levels and it's just another inside candle. All right, but my buy the dip zone would be 71 to 65 and a half. And as far as targets go, I would be targeting 81 and then extension targets above there, that first extension target of 84. All right. So that covers MP. The other metals and mining name, this is one that I was also watching for last week. I didn't get the pullback to my zone. My alert's still there. And so I continue just to watch this. A pullback into 867 by 770 is my buy the dip area, targeting all time high and then extension targets above. I'm not going to put in an automatic order. I don't want to have a ton of those out there, but this would be the buy the dip zone on the weekly chart. If you are interested in trading it, but say you just want to trade it for next week, I would just use the weekly edges, buy in the dip here at the lower weekly edge and targeting the upper weekly edge. Now, if you want a zone, right, to use as a stop, I would just use this bottoming wick right here. So it's a very tight risk of about 17 cents and your reward is about $1. So nice risk to reward for a quick trade. Um, again, tight risk there. All right. So that covers UEC. Now let's look at home construction, DHI, another name that I didn't get a pullback to get in the trade, but it's still looking strong. But you see last week, this target zone right here, we came right to it and down we went. We did not close above the 618. I really wanted to see price close above here and even close above this yearly edge mid here. If that were to happen, and it could happen next week, but if that were to happen, I would be targeting 190 by the high up here. Let's call it 200. This would become that target. But for now, all of this is resistance, and DHI on a weekly time frame chart is going to have some problems more than likely getting through 170 to 182. On a daily chart, you have daily supply there as well. We did create an inside candle on Thursday, and then Friday came up. It looked like it was going to be great, but there was supply right there. Nothing for me to do on DHI with price up in that supply or very near that supply. If I look at a 4-hour chart, you have an inside and up candle formation here at 162.06. This zone is on was on my screen already, and the lower weekly edge is down in here. So anywhere from 160 to 152 is a buy the dip opportunity on DHI. And then obviously, if you have a dip like that, and let's just imagine it comes down to the lower weekly edge, then I would be playing it back up to the 38.2 and the 618 targets above. So keep that in mind when creating your trade plan, because if you're saying you're going to enter here, let's say I'm going to enter at 155 and my stop is 152. Well, that gives me $3 of risk, but I can't set and pretend that I'm going to hold on to this thing for $15. It would sound great, but I would have to realize that the candlestick structure, if price came down here, the candles are coming down here as well. And I would need to draw fibs and play it as a relief bounce uh, on the way back up to that 169 to 173 target. All right, so there is a couple of ideas on DHI. More than likely, I won't play this name because honestly, I just don't anticipating us coming down to the lower weekly edge. See, if I'm know I'm going out of town, right? And I don't want to be in a bunch of swing trades while I'm on vacation because I want to relax and not look at the market. Um, then this move needs to happen. So the move to the lower weekly edge needs to happen on Monday and Tuesday at the absolute latest for me to play it off of a lower weekly edge. And looking at where price is at and looking at where that lower weekly edge is at, price would need to drop over $10. And it could happen, yes, but I don't anticipate it happening on Monday, so I'm not going to create a plan for myself on DHI. Next up, another name that I've been watching in home construction sector is Pulte Homes. Let me show you from a higher time frame perspective. These are Fibonacci levels, these lines on my chart, measuring from the high to the low. I'll go ahead and show you here real quick. I have these on here because I'm interested in that 887 up there, and I actually need to drop that line a little bit. See how price is above the 618? It closed above the 618. Well, now 142 to 150 is a viable target for me on this name. Okay, so we are above the 618. That makes 142 to 150 a viable target on this name. As far as pullback buys go, right? I like to use trendy edges. I like to use inside and up candlestick patterns. I also like to use Fibonacci levels. The first level is here at the bull channel on this name. 123 to 117. That's a buy the dip opportunity. Notice if you trade this squeeze that Pulte was in a weekly squeeze from April all the way to this week, that weekly squeeze firing one bar. So a pullback to a bull channel where I have trendy edges is a viable dip for me or would be for me. So 123 to 117. And then, of course, I'm playing it up to 135, 142, and 150. All right. I really like this chart. For a multitude of reasons, but I love that it's above that 618 of the down move, and now I know that that 887 by the all-time high would be a great target. So buy in the dip here at 120 let's just say 123 to 117, $6 of risk, about 14 or $12 of reward. So I like this trade right here, and I'm going to create an alert at that zone and see if I can get a pullback to there that Riley, I'm live. I love you. Sorry, guys. All right. Oh, the weekends are crazy here. Sorry about that. All right. Daily chart inside day. Yes, or Thursday, and an inside day on Friday. Daily supply at 135 to 140. Daily demand 121 to 118. As far as the 4-hour chart goes, on this time frame chart, I like to trade the weekly edges. So, but look here where I have this alert for that bull channel pullback. You see the inside and up candlestick pattern. This is a zone that you can trade. This is a demand zone on the 4-hour that you could trade off of as well. So, a lot going on here on this name. If I was trading this for a trade I intended to be in for a week, I'm going to buy down in here, and I'm going to target this upper weekly edge by this pivot high. All right, 130 to 137. All right. All right. What do I have up next? Let's talk about XLC, the communications sector. Google is doing great. I believe I got a trim on Google on my equity side. Must start with the higher time frame and work my way down. But it's a beautiful recovery off the lows in April. Weekly demand at 190 to 186. That lines up with the 236 of this rally. A lot to like there on Google down near 190. On the daily chart, you have daily demand at 195 to 190. Again, a lot to like for that level there. You have your upper yearly edge that we now expect to act as support. The daily 21 is lining up. Just a lot to like in this area. So if I was looking for a dip buy on Google, I would choose this zone here and trade it back up to the all-time high. But if we get this dip, remember, I'm going to have candlestick structure up here. So I have to be realistic and say my first target would be right around 200, and then the all-time, not, yes, this is all-time high of 207. All right. Up next, I want to talk about EA. Give me 1 second here. All right. Next, I'm going to talk about EA. I've traded this off and on over the years. It can be a volatile one, guys. Let me tell you, you can get some big, big, unexpected moves. So be aware if you were to trade EA, is that it acts pretty volatile. But here's your demand on the weekly 151 to 143, targeting 181, that high there. On the daily chart, here's your inside and up, and then look, 1, 2, 3 big, powerful up candles here. A couple of days of consolidation, and now we're pulling back. Could be coming to the lower weekly edge and the top of the daily cloud or the daily 9 EMA. So this could be a quick trade for this week, let's look at the 4-hour chart because that's where I like to trade trades I'm going to be in for a week. And let's see, that would be in this area. Remember, the daily cloud, the daily 9 EMA is lining up there as well. So a confluence of support, even though I don't have candle structure here. You can do one of two things. Number one, if you have the indicators, you simply turn on the edge cloud. That'll give you a range to trade like this. Well, I'm sorry. It will on Monday. Okay. But just looking at the other clouds, it looks like it's going to give you about a $2 to $3 of risk there. Okay. Somewhere around $2 to $3 of risk is what the cloud is going to give you. And from there, you have to think about where your trims would be. You can run fibs from the high down to the lower weekly edge. And what I like to do, I like to scale in and I like to scale out. And I like to use the 38.2 and the 618. So taking a trade off the lower weekly edge, trimming at about 175, 177, and targeting 179 by 181. All right. And then let's see what is next. Talked about Google, talked about EA, Live Nation, another name in the communication sector. I can see that that 4-hour chart is no longer valid. I haven't looked at this name in a while, but let's chart it together. Look down, look left, look for your inside and up candlestick structure. That's my buy zone on this 4-hour chart. It lines up with the lower weekly edge and a monthly edge. I'd be curious to see if it's also going to line up with a daily 9 EMA, but I will look at that in a minute. The level is about 154 and a half to 151.68. So again, about $3 of risk here. And then the target's the upper weekly edge by that high, but I would trim along the way, either one or two trims, just depending on how many contracts I'm in, but I'm just going to use the 50 here and say one contract because it's pretty tight range. So that gives me about $3, a little less than $3 of risk, about $4 reward for my target, and then my final target, obviously $7 to $8 of reward there. All right. So that covers Live Nation and the communication sector. Let's look at the tech sector. I chose Apple, Palantir, and Oracle to look at because, there's a lot of overlap between tech and semiconductor sectors. And so I didn't put any of the semiconductor focus uh, in the tech sector because I knew that I'd be covering it in the semiconductor sector. But look at Apple. Um, Beautiful, absolutely beautiful candle here. Not the week we just finished, but the week prior, the week of August the 4th. Beautiful candle. Then this week was actually a continuation candle. Now, it isn't really a powerful continuing move, but the markets are at all time highs. There's just a lot saying, hey, we're not going to have just another candle of the previous candle size, considering what the overall market is doing right now. It's more choppy. All right, sorry about that. So, um, just beautiful here, but we are very extended from the weekly EMAs, and that cloud is down here at 215. Now let's look at the daily. We did create inside and up, but to be honest, this is not a powerful zone because the candle out of the zone was not powerful. I just put it as a potential area to buy on a daily chart. The weekly edge is lined up in here, but just know that this is not a powerful zone. When you see a bigger candle move out after an inside candle, those tend to be more powerful than something like this. All right. So keep that in mind. Let's look at the 4 hour chart. All right. So on the 4 hour, I would actually increase the risk on this zone. And the reason why is next week's lower weekly edge is down here. So I would make this a risk of $4. And as far as reward goes, it's about a 1 for 1. So any trade on Apple, just know you're getting pretty choppy up in here. And you could experience chop this week. It wasn't fun for me. I got into Nvidia not last week, at the end of the week before, and I got to play chop in Nvidia each day last week. And I just don't like those types of trades, so I try to avoid it. But I wanted to give you upside targets on Apple in the event that maybe you're in an Apple position. The levels I'm looking for on Apple as far as further upside goes is 236.51 and then 244.03. All right. Next up, let's look at Palantir. I actually had an order in to start a trade on this name, and it didn't quite fill. I'm going to show you on a weekly chart, although I wouldn't be trading this on a weekly chart. I'm going to show you on the weekly chart why I had an order in down here at 174. And that's because I measured the range of the prior week's candle that was so strong. And PLTR dipped down into the golden pocket, and very strong name. I wanted a piece of a bounce from this golden pocket. Now, could it roll over and come back to demand? Absolutely. We're extended from the weekly cloud. Yeah, that could happen. Or it could just sit there and chop. I was just hoping to get the first touch of this golden pocket to play a bounce up, and price did bounce up $3 there yesterday. I just didn't get filled on the order. As far as a daily demand goes, you have a gap here. Right, that big explosive candle, well, it created a gap on the daily chart. So, my next areas of support for Palantir on a daily chart is going to be right here at about 169, and then the gap fill at 160. Price could continue dropping though, because our daily demand is down here at 149.30 by 137.39. All right. If you just want to trade this more of like a couple of day type swing trade, you can just play it from a weekly edge to weekly edge. So basically where I tried to get in, right? Somewhere around 174-ish, 175. And then you're targeting 185 to 190. All right. So that is Palantir. Next up is Oracle, another name that's been on fire. Let me check. Okay, yeah, we have time to expire or timed expiration. Time until earnings. They report earnings September 8th. Now, I personally don't have time till earnings, but you would if you traded it just for next week or the week after. Okay, it is chopping. It had a nice rally like everything else, practically everything else, and it's building up energy right in here, probably due to earnings coming up soon. Look at the daily chart. Price dropped below the daily 21, and it stayed below the daily 21 on Wednesday and Thursday, and then buyers stepped in and price closed right at that daily 21. So it's also right at the top of the daily cloud here. So if price can push up and above 248.84, I'm targeting 255.60 to the all-time high of 260.87. Your lower weekly edge is down here at about 244. That would be an edge to edge play if you got a quick pullback and then shot up. So, one idea that I have in order to play Oracle is to play it out of the PMZ and treat it as a day trade. But here's the zone, here's the lower weekly edge, here's your upper weekly edge, and also a supply zone. Okay, this topping wick is obviously resistance, also a big round number, 250. Not surprised if we run fibs of that move, that big move down. Not surprised that that topping wick is in a golden pocket either. So there's some targets that you can use playing from this green zone up to the red zone target. So I will probably play Oracle some day trading out of the PMZ. We shall see. But that is a nice uh, idea for a 1 to 2 week trade here. Okay, about $4. You got a first target reward of 4.5, $5, but then second target and final target would be a great risk to reward. All right. Next up, let's talk about the semiconductor names that I'm watching. AMD, I'm just going to give you a top-down approach. Uh, it's at supply, okay? It's got some work to do to get above 193.50. On the daily chart, inside and down candlestick formation was created on the move down on Friday, and you got a trendy turn signal to the downside. All of this is a yellow flag telling me, hey, be patient on a pullback. Wait for a demand zone. Wait for a confluence of the yearly edge mid, the lower weekly edge, the daily 21. Wait for this kind of pullback rather than being scared of missing out on a move because AMD has been doing so well. Looking at the 4-hour chart, it's going to look very similar. These would be targets back to the upside. Here's the buy zone for me, or I will just day trade it, right? But you do have supply. It has been tested now 2 weeks, but it's still here. Bulls would need to get it above 193.50. All right. Next up is ABGO or Broadcom. Topping wick, right? On this weekly candle, doji candle, looks very similar to NVIDIA, or not, probably NVIDIA. I haven't looked at it yet, but the NASDAQ. All right. Daily cloud support right here, daily 9 EMA cloud support right there. This was a beautiful pullback to 300, the lower weekly edge, and price bounced about $6. Very similar to Palantir there. Then on the 4-hour chart, again, beautiful bounce to the zone. Next target 311, 315, and 318. This is another name that would be a candidate for me to trade from lower weekly to upper weekly edge if I get a pullback on Monday or Tuesday at the absolute latest. I would trade this zone $4 of risk, and target's going to be about 8 or $9 above. So, I like that risk to reward, and AVGO is another one that I will look to, probably have up on my charts on Monday to watch it, for this potential pullback. All right, and then next up would be NVIDIA, that name that I sat in chop all week. Let me show you what that mess look like. That. Now, I was able to salvage my position because I was day trading it. Just quick, take your profits at the top of chop and enter at the bottom of the chop. That's the way I played it. That's how it played out. It was not a trade that I enjoyed by any stretch of the imagination. I don't like to play that kind of chop, but I wanted to give y'all levels on NVIDIA in case you're looking for a play ahead of earnings. And they report earnings, I believe it's August 29th. And I remember that because that's my dad's birthday. It's how I remember it. Nope, August 27th. Sorry. So here we are. We create an inside candle on the weekly candle, on the daily. Here's that rounding top that I said aren't my favorite. You got a trendy turn signal to the downside. You could, or I would expect some further weakness on NVIDIA. Therefore, on NVIDIA, I wouldn't be buying this lower weekly edge because it's too close to the area that price chopped in all last week. That means it's weaker. I would be focusing more towards the bottom of this zone, so 176 to 174.50 down there. But that's just me. Look at the 4-hour chart. That's for me, a pullback I would be looking for in NVIDIA to get in a swing trade. But I'm not going to be swing trading NVIDIA next week because I'm going to be on vacation when they report earnings, and I don't want any part of that because I trade straight up calls and puts. So ahead of earnings, I'm going to be paying higher than normal premium because of the implied volatility. But then after earnings, when all that falls off, your straight up calls or puts can lose a lot of intrinsic value, and even if the move is in your favor. So that's why I don't trade straight up calls and puts around earnings unless it is like, hey, I don't care if it goes to zero. And all your trades should be like that. But with an earnings trade, you can almost just bet you got a 50-50 chance it's either going to do well or it's going to zero. All right. All right. So that covers the names that I'm interested in for this week. It covers the sectors that are the strongest, and isn't there a valid LYV with the parent candle 8:13 9 a.m.? Let's look, Bob. Uh, I don't know which time frame you're looking at on LYV. The 4-hour. Okay, great. Yes, there is. See this line here, Bob? Yes, it's inside and up. but I just didn't put it there because look how close it is to price, right? This zone here is the one I chose because that lines up with my trendy edges. So that's what I chose, Bob. But yes, you are correct. That is inside and up. All right, guys. So, anyone have any other questions? Any other questions? I'll take a couple of questions and then I'm going to wrap it up. In case you can't tell, my allergies are really, really bothering me for the last couple of days. Lots of sneezing, lots of coughing, and yeah, fun stuff. The joys of living in Florida surrounded by uh, jungle. All right, guys, if there's not any questions, when am I going on vacation, John? I leave Friday, and I'm going to St. Thomas, St. Martin, down in the Virgin Islands down there. I think also Puerto Rico, one of my absolute favorite places to visit. So yeah, it's gonna be a fun time. Just my husband and myself on a cruise. All right. All right, guys, I'm gonna hop off of here. I have my grandchildren in the house, so I need to go and get them some breakfast. But I hope you have a wonderful weekend. While I am on vacation, of course, I will not be doing any live sessions, but I do have some videos scheduled to post to YouTube. So I'm not leaving you completely. But so be sure and check out those videos that will be posted while I'm on vacation. And if you're a part of the Trendy Room, I will see you Monday, Tuesday, Wednesday, Thursday, and Friday in the Trendy Room. If you're not a part, check out the description. There is a link where you can get a 30-day trial for only $7. All right. Until next time, y'all have a great day.